Greetings, everyone. I hope that everyone is good today. Let us quickly have a look at USD SGD, which is the Singapore dollar. So, without any further ado, let us get straight into the chart. So, you guys can see that I've got the monthly chart open, and the first thing that I can already see is that we had this area over here where the market had been moving in a range for quite some time. In fact, this range started in more or less 2013, and now we're in 2020, and the market is still pretty much moving sideways in as far as the monthly chart is concerned. Nonetheless, let's move forward. Is there anything else of interest that we see on this particular chart? And the answer is yes. I see this candlestick over here, which is a bullish candlestick with a small body and a long upper wick, which suggests that at this level over here, we have a lot of liquidity there, and that the market needs to trigger that liquidity at one point or another. Another very interesting thing that I see is that we had this movement over here. Excuse me, guys. We had this movement over here, and the reason why we had this movement over here is because of this information over here, which had the neckline in that region. So what normally happens in as far as informations go is that a lot of traders would look for selling opportunities on the second leg of the information, as well as on the break of the neckline of that information. So once that happens, these sellers put their stop losses just above the information. Hence, we saw this move. It was actually a stop hunt, and that can also be confirmed by this particular candlestick over here, which I spoke about, because it's actually a pen bar in a way, and it went just above where the information ends, right? So let's continue. Before we continue, actually, I'm just gonna add a line to that liquidity bar so that we don't forget about the fact that we have that area over there. I'll just put it over here. It's a very important area, as the market needs to come to that area at one point or another. Just bear with me, guys. Just bear with me, guys. We'll try doing it this way. Okay. There we go. There we go. Right. So let's continue. So is there anything else of interest on this particular monthly chart that we should be paying attention to? The answer still yes, guys. So as much as we had this information here with the neckline there, the neckline was broken. However, price went back in, making this entire formation irrelevant, in my humble opinion. We also saw the formation of a W in this region, with the neckline being there. The neckline was broken, and price came back to retest it. However, the neckline was not able to hold, making this W formation irrelevant in my opinion, because price went further down. Right. We also had a smaller W in this region, with the neckline being there. However, as much as the neckline got broken to the upside, we are yet to see price coming back to the neckline to retest it before possibly heading up again and to grab that liquidity. As we spoke about this candlestick over here, which is a bullish candlestick with a small body and a long upper wick. So what I'm going to do now actually is add a neckline to that W structure, because I believe that it's a very important W structure, and we need to keep our eyes on it as we move along. So there we go. I would put my neckline there, right? And as I said, guys, that we are yet to see price coming back to the neckline to retest it at this point. And should price do this, we would look for further buying opportunities at this level. And our first take profit would be this candlestick over here, which is also a liquidity candlestick, because it is a bullish candlestick with a small body and a long upper wick. So this level over here would be our first take profit, in my humble opinion. The second take profit would be this particular level over there. So let's continue. So the next thing that I'm going to do at this point in time is add my Fibonacci retracement tool, just to see if this particular neckline of this W aligns with any of the key levels that we have on the Fibonacci retracement tool. So please bear with me, guys. Let's see. Just to recap, this is our W formation. The neckline is in this region. So can you guys see that the neckline is in line with the 61.8% Fibonacci zone, which means that should price from where it is currently come to this level, we would indeed look for possible buying opportunities, right? And that's because we have the W formation, we have the broken neckline, and we have the 61.8% Fibonacci zone, which would all act as confluence in as far as us looking for buying opportunities is concerned. So I'm just going to remove that Fibonacci tool, and let's keep going forward. What else do we see on this chart that is interesting or significant? At this point, I do not see anything else, and what I'm going to do is head over to the weekly chart. However, before I do so, I think I also need to point out that we have below this W formation a whole lot of stop losses that are here, and in the future the market will come back to this level to grab those stop losses, because as I said to you guys, that a lot of buyers bought in this region and some more bought once this neckline was broken. So let's go to the weekly chart. So here we are on the weekly chart. What do we see on this chart that is interesting or significant? Let's see. So there were a whole lot of W formations on this particular weekly chart. We spoke about this one, which is on the monthly chart. Here's another W here with a neckline there. It seems as though that the neckline was broken. In fact, actually, this particular neckline, or rather this particular W, had a neckline there. However, the neckline was not broken at this point. Price came back further down, and what actually happened is we had an even bigger W formation, which is over here, which had its neckline there. And what's happening at this point in time is that price is retesting that neckline, and it's probably a good idea to look for further buying opportunities. So what I'm going to do now actually is add another neckline to that W structure, because it's also very important. Just bear with me, guys. There goes our W structure, and I'm also going to utilize the Fibonacci retracement tool just to see if the neckline aligns with any of the key numbers that we have on the Fibonacci retracement tool. Just bear with me, guys. So there goes our Fibonacci retracement tool. So guys, can you see that the neckline of this bigger W structure is in line with the 50.0% Fibonacci retracement? So in my humble opinion, this would be a good idea to look for buying opportunities. Let us also not confuse this W formation with that bigger W formation that we spoke about on the monthly chart. So as I said, guys, I would be looking for possible buying opportunities at this point. However, it may be a bit late, but nonetheless, let's go to the smaller time frames to see if there are still buying opportunities at that point, because at the end of the day, we don't want to find ourselves chasing the market, because that's what amateurs do, right? So over and above us having this W structure, just before I head down to the smaller charts, I just want to point out that we also have an overextended information at this point, with the neckline being at that area over there. So this is also very interesting in that we have two opposing structures where we have a W with a neckline here, and we have an M formation with a neckline there. I think the two necklines are too close to each other for us to be looking for opportunities, if you think about it, especially on the bigger time frames. However, there might be other opportunities on the smaller time frames, but on the weekly chart, I would not be looking for any buying or selling opportunities. Nonetheless, let's continue. Before we do so, I'm just going to add a line actually to that neckline, because it's also very much important, and we should not forget about the fact that we have this area over here. Just bear with me, guys. So yeah, that goes our neckline. There we go. So let us continue. So what I'm going to do from here is head over to the daily chart. The first thing that I'm going to do on this daily chart is add my daily channel. So how would I add my daily channel? Excuse me. Just bear with me. So I would add my daily channel in this manner. Let's see. Let me see. Bear with me, guys. We just also need to ensure that our channels are as accurate as possible, as I usually say. So there goes our channel. So we had a touch there on the channel, we had a second touch there, and in the future we might get a third touch at this point. So let's continue. So what do we see on the daily chart that is interesting or significant? So on the weekly chart, we spoke about this neckline of the huge W structure, and I said that price had broken the neckline and then came back to retest it, and I added that we should be looking for potential buying opportunities at this level. So that is what we're doing right now. So over and above us having that huge W structure, we need to keep in the back of our minds that on this particular daily chart, we have what seems to be a head and shoulders pattern forming as well. So I said that we should be looking for buying opportunities over here, but we need to be cognizant of this head and shoulders pattern over here that seems to be falling, because we have the left shoulder here, the head here, and the right hand shoulder there, right? So let's continue. What else do we see on this chart that is interesting? Let's see. Another thing that's interesting is that over and above us having this head and shoulders pattern, or what seems to be a head and shoulders pattern, we also have another pattern over here, which is an overextended W formation forming. However, this W formation is yet to break its neckline, right? It's yet to break its neckline. So what I would actually do is, because we spoke about potential buying opportunities in this region, what I would do is I would add a neckline there and wait for price to actually close above that neckline, and then come back to that neckline to retest it, and that's when I would look for further buying opportunities. And that's because, as I said to you guys, that this huge level over here is the neckline of that huge W structure that I spoke about, and we spoke about the fact that we should be looking for buying opportunities at this level, right? So let's continue. So what I'm going to do from here is head over to the H4 chart just to see if there's anything that can rather confirm um, if we can indeed look for buying opportunities. Before I do so, also let me just point this other um, one thing that I want to say, which is very important. So I spoke about an inverted head and shoulders pattern here. Over and above that, there's an actual M formation here. So can you guys see that this M formation as well as that huge W formation actually share a neckline, right? Hence I'm saying that it's probably best for us to wait for price to actually break above the neckline of this um, W formation and then look for further buying opportunities, because as I say guys, that it makes no sense in my humble opinion to have two formations that are opposing that share more or less the same neckline, like this M formation here with a neckline there and a W formation here with a neckline there. It makes no sense. It's very risky in as far as buying or selling at that zone. Nonetheless, let's continue. So from here I'm going to head over to the H4 chart. The first thing that I'm going to do on the H4 chart is just make sure that I fix my channels, which I drew on the daily chart. There we go. There we go. That should be fine. All right. And the next thing that I'm going to do is I'm going to add my H4 channel as well. Just bear with me, guys. Let's see. There we go. There we go. I'm just going to make it a different color as well so that it stands out. Just bear with me. Let's make it a pink color for a change. There we go. So what do we see on the H4 channel, guys? Remember I spoke about that head and shoulders pattern on the weekly chart, with this being the left shoulder, the head, and the right hand shoulder being over here. Another very interesting thing is that as much as we have this inverted head and shoulders pattern, we have price at this point breaking the channel. So this says to me that, or rather this is confirmation to me that we should be indeed looking for buying opportunities, as I said on the daily chart, right? Because as I say guys, we have this inverted head and shoulders pattern as confirmation. We also have this channel which has been broken, and we see that price may come back to the channel to test it, and we may look for our entry there on the retest of this channel, right? Another very important thing is that we have to wait for price to actually break this neckline, in my humble opinion. I hope that makes sense, guys. I hope that's not confusing. So let me just recap one more time. We have this, in fact, let me go back to the daily chart, right? On the daily chart, we spoke about that huge W structure, which has a neckline here, right? And I said that we should be looking for a buy opportunity here, because the neckline of this W structure also is in line with one of the key Fibonacci areas. I think it was the 50% Fibonacci retracement zone. To add to this, I said that we have another W structure over here with the neckline being there. However, the neckline has not been broken as yet, and it's probably best to wait for price to close above that neckline, come back to retest it, and then that's where we would look for further buying opportunities, right? And just to go back to the H4 chart. So on the daily chart, this particular head and shoulders pattern actually looks like a W structure. Nonetheless, it's the same thing in my humble opinion. We're just looking at it from different perspectives, right? So as I said, guys, this channel has been broken. We have the formation of this W on the daily chart, but on the H4 chart it is expressed as an inverted head and shoulders pattern. However, we are yet to see the neckline being broken. So what I would do actually is wait for price to break above this neckline in this manner, and then come back to retest this neckline. Once price retests this neckline, I would look for an actual buying opportunity, right? And my first take profit should be around this area over here. I'll show you my second take profit zone. From here, I'm going to go to the daily chart. So my first take profit should be this area over here, which I pointed out on the H4 chart. And then the second take profit zone should be this zone over here, in my humble opinion. However, ultimately the goal is to get to this level over here where we have that huge bullish candle with a small body and a long upper wick, because I'd said that we have so much liquidity sitting at that level and that the market has to grab that liquidity, and it may be that that's what the market is waiting to do, because let me actually just make this slightly smaller. Just bear with me, because earlier I said that we have this zone where the market had been moving sideways for quite some time. So it may be that price is going up here to grab the liquidity there, and once that liquidity has been grabbed, we might see price coming back down to the bottom, because we have a whole lot of stop losses at this, or rather below this region, and that is because a whole lot of buyers were buying at this level and putting their stop losses just below this level. Another thing is that we have this candlestick over here, which is a bearish candlestick with a small body and a long lower wick. So this tells me that we have liquidity there, and that the market at some point has to grab that liquidity, because that liquidity actually represents a lot of money. The last thing that I want to speak about is this area over here. It seems as though we have a gap at this area. So gaps are very much similar to liquidity candlesticks in that they also carry a whole lot of liquidity where they are. So the scope for price to come to this level, and it may be that price at the moment is just going up to grab the liquidity at this level, and we might see it over the next couple of months or even years come down to this area to grab actually the first stop losses that are below this level, and then grab the liquidity of this candlestick, and then grab the liquidity that's stuck in this gap over here. So guys, I hope my analysis makes sense. I hope it makes sense. If it doesn't, just let me know in the comment section. If you have any further questions, just let me know in the comment section. And if there are any other charts that you would like me to have a look at, just let me know. Thanks for watching, guys, and peace out.